We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high income earners. Welcome, everyone, to today's episode of the High Income Earners FIRE podcast. I'm your host, Eileen Prack, joined by my co-host, Cody Ye. And today we have a fabulous guest, Bobby Shell, for us today. And he is an entrepreneur, real estate investor, and current VP of marketing at Voltage Cloud, a Bitcoin infrastructure company. And he's going to share with us today how he's built up equity in his business, how he's invested his cash from his W-2 to earn passive income tax-free through his real estate investments. And so this is going to be a really super great episode. So stay tuned and welcome to the show. Bobby, how are you doing?
Hey, doing great today. Thank you guys for
Bobby.
All right, Bobby. So can you give us a little bit more of a background, like who you are and share with us a little bit about what are some of the things that you're focusing on?
Yeah. So I'm a lifelong sales and marketing student and worker. And over the last 10, 12 years, I've worked in digital marketing. And really in the last 2 years, I've made a shift into working in Bitcoin and wanted to just bring my skills into a different industry while I'm still doing marketing. I see what Bitcoin has brought to the world, and 80% of the world does not live, or 80% of the world lives under an authoritarian regime, under capital controls. So us as Americans, we're like quite spoiled, and we don't really have to think much about the things we do. We're kind of blessed in every day of how we live. And what really caught my attention was just the human rights tool that Bitcoin is. And I wanted to give my energy towards that, and bringing my marketing skills to this new industry. And that all being said, I still have an interest beyond that, a passion for real estate, and I learned a lot in my last role about real estate syndication, the passive income and the tax-free strategies that you can leverage from friends who are far further in their career. And in the last few years as well, I've learned a lot about just equity ownership in a business. Whenever I left my last job, I was told I had all this equity, it would be worth millions. And then when I leave, you have nothing. And unless you pay this massive tax bill to get the shares of these private shares of a company that's not publicly traded, you have this large tax bill, and you just have to really cross your fingers and hope that the owners of this company are going to actually have a good merger or acquisition or an IPO. So kind of been through the ringer, but excited to share some of that perspective and just my background with everyone today.
Why not we start with, I guess probably a lot of people are really interested in the equity ownership. So you were promised equity ownership when you start working for, I guess, more of a startup company, right? And when you left, I guess you brought the growth for the startup company, but when you left, what happened? And why do you say that there's nothing left in equity?
Yeah. So in a lot of startups in Silicon Valley, there are these secondary markets where if you have shares of a company, you can sell them to other private equity investors or, folks that see the value of the company and they're willing to buy it from you. But the company that I had left, they had it written in a clause where you're not allowed to sell to these secondary markets, which is incredibly disappointing when you're a young entrepreneur who is kind of being told one thing. And then when it's time 10 years later, you want to make your exit and it says, hey, you can't. So it really matters to kind of read the fine print. But really what's really important is when it comes to owning equity in a company, mergers and acquisitions are a bit more complicated than an IPO. There's a lot more things that could happen and go wrong. And I'm not here as a professional to educate on M&As or IPOs, but the thing I really learned giving, 10 years of my life to a company is when someone says, hey, we're going to give you these shares or this equity in the company, you really need to do diligence and understand what you're being told you're given. Because whenever I did leave the company, you need to, pay a fee for those shares. And I had to pay a tax bill of, I got my shares at 60 cents. So, I was in for a few grand, which sounds incredible, and now the shares are worth $7 or $8 a piece. But by paying that small fee to them exercise and get the shares, they were valued at 40 to 50 grand. So then I have to pay taxes on that And to me, that wasn't worth it. I didn't believe in what the company had done, where they were going. And I actually chose not to do that. What would have been better was for me to sell them to someone on the secondary market and use their capital to pay that tax bill. But, that was just how that situation ended. So I think that's something a lot of people, might learn the hard way. But, how I spin that is, equity in a business is incredibly valuable. And what it really taught me was, I want to be the one who starts the business or, has more control over the equity in the business. I don't want to work for someone who kind of is navigating the ship and kind of controlling my destiny. I want to be the one that controls the destiny. I want to make better decisions for my employees and put them in a position that sets them up for success and not for disappointment, once they give, a quarter of their life to me working.
Isn't, especially in Silicon Valley, there's such I wouldn't say an illusion, but there's such a vision or a stigma of, investing in startups and coming out of there being multimillionaires. And especially for people who are just getting started in it, like it's hard to not get super excited when somebody's offering you, all this equity in the company because it's a startup. It's a sexy thing. It's something that's super exciting for them. The possibilities of how they can exit later on and become and, be one of the success stories from Silicon Valley. But you mentioned something super important there is to really understand the contract and the terms as you're getting into that before you, sign off. And, because when you're going to exit, something like this could totally be something that you didn't expect for or that you didn't fully understand.
Yeah. Yeah, it's a hard lesson learned, but there's a lot of good material out there and education on it. So, hopefully just hearing that, it sends someone down a rabbit hole to really protect themselves.
A quick 30-second thing. How would you protect that besides doing more due diligence, maybe have your lawyers look at things and, I don't know, a set of LLC or something? Or is that something down the line? Is this 30-second solution? Is it if just like when you're sending someone down the rabbit hole, whatever, like the top 3 things they should look for?
I wish I knew. I don't really have like a great answer for that. I think the biggest thing though is whenever you're offered equity in a company, like typically when you're working for equity and not a paycheck, without saying it, you're kind of thinking and committing yourself to like a 5 to 10 year time frame. So you really are going to give a lot of yourself to that company. And typically, like Peter Thiel said it good in the book 0 to 1. He said, early founders, like reward them with equity. Don't just pay them a ton of money. Like put the incentive, that carrot on the end of the string. It's the equity. It's that large payout one day. If you're minded like that, and you're just not one of the people who's like, I just want money now. I want to work long term, which gives you outsized returns. Obviously, has a little more risk. If you are that type of person and you're going to take that route, what I would say is spend a few $100, $1,000 and invest and have a lawyer read it to tell you the pros, the cons, and the risks, and understand that ahead of time, because I think that's really the best thing you could do in that situation. I don't have much beyond that I would probably share.
That's a great advice. When you can potentially earn 5-figure, multiple 6-figure, if not multiple 7-figure, it's actually worth it to spend a few $100 up front to just make sure that you're covered, what yourself is getting into, instead of just kind of look the other way, be like, yeah, I was promised this dream, and come back and be bitter too, right? Because it's in fine print, but not everyone reads the fine print, but supposed to read it, right?
Yeah, and the time that you spent there that you can't not get back.
Yeah. Opportunity cost. And we're kind of going to segue from the equity ownership part of things. And I know that you were working there for almost eight years, right? 8 to 9 years. And now you're kind of moving to a VP role for marketing. And can you kind of tell us what is the role that you're doing right now with this marketing and Bitcoin, right?
Yeah. So, a lot of people think Bitcoin is just simply digital gold or a store of value is what they say. And it's a misconception just because, that's kind of the layman's narrative people create. But whenever you look at the internet and how it's been built, it's built in layers. There's, about 7 layers to the internet, or 8 layers to the internet. And the one that's missing is the payment layer. And there's actually a payment error that's unused on the internet right now that has to do with native digital payments in the internet. And Bitcoin is that. And at our company, Voltage, what we do is we provide infrastructure for companies and brands, application services who want to integrate Bitcoin into their business. And how this is typically done is with Bitcoin's layer 2. So, Bitcoin is the payment layer for the internet, but Bitcoin also has layers being built on top of it. And the second layer is called the Lightning Network. And what it allows and gives people the capability of is being a peer in a decentralized peer-to-peer network so that payments can happen instantly and globally without any middleman. And what's actually happening is people are taking this technology stack and integrating it into video games. That's happening now, where people can play to earn Bitcoin in video games. There's a movement called Podcasting 2.0. The man who actually created podcasting, Adam Curry, he has now created Podcasting 2.0, and it's a value for value model where whenever you listen, you can actually pay your content creator directly. So we know Apple takes 50, 60, 70, 80%. Content creators can actually earn 3 to 10 times more by leveraging the Lightning Network. And it actually just kind of removes middlemen and just kills the intermediary and just allows people to make payments globally, instantly. And you can do it for less than a penny. You can even send a penny to someone. And this creates a lot of new opportunities for people. Like when it comes to Visa, MasterCard, Amex, they charge, 1, 2, 3% for purchases. And there's a high risk of chargeback if you're familiar with how, payment services work. So the Lightning Network not only allows instant global settlement, but it also reduces friction of payments and the chance of chargeback for businesses. So there's a lot going on, but we are the infrastructure provider that gives people the tech stack they need to integrate that into their business, bank, application, or solution.
Wow. That's a lot of information to digest, but I think I grabs a thing or two. That's very amazing that you're doing marketing for that. And do you personally invest in crypto?
I don't invest in crypto. That's one thing that's very important is when it comes to crypto, anyone can really make a crypto. There's not really an incentive to buy and hold a crypto other than to, buy it and sell it more to the next guy. It's very easy to create. It's kind of like the dollar. Like they can just print more when they want. With Bitcoin, that's not the case. You can't create more Bitcoin. There is no one throat to choke, what happened in the last 24 hours was Ethereum went through what's called the merge. This is probably above a lot of people's head, but they moved to what's called proof of stake. And 65% of the Ethereum is owned by 5 institutions. That's not very democratized. That's not very decentralized. That's kind of the legacy system where a small group of people own most of the money. And that's a big problem in the world. And that's why a lot of people listening to this, high net worth earners, they invest into real estate, is because when you're close to the money printer, when you have good credit and you have access to capital no one else does, well, by God, you just keep getting richer. And that's kind of what crypto is. And it's not good for that reason. I choose not to take part in crypto because I don't want to be a part of just the problem that persists. So Bitcoin is different than that. I only invest in Bitcoin. I only focus on Bitcoin. And just from a value, morals, and principles perspective, I think it's the only thing that people should really be concerned about. But it's a deep rabbit hole in itself.
Since you're the expert on this, can I ask if you know what are the percentage of owners for Bitcoin? Are those public knowledge? Because I heard rumors about it, but I want to confirm from your side.
Yeah. So the blockchain is open, transparent, and clear. One thing you'll hear people say, though, is, X amount of wallets hold this much Bitcoin. And one thing that's going on in the world right now is there's a lot of exchanges where individuals leave their coins on there. And those are those quote unquote wallets that hold most of the Bitcoin. FTX is one of them, Coinbase, Kraken, Gemini, etc. So it appears as though a small group of people hold Bitcoin, but those wallets are actually exchange wallets. Whenever you take that data out and remove exchanges, and you look at what amount of wallets and people hold 0.1 Bitcoin or 0.01 Bitcoin, it's up and to the right. Every day, more and more people are holding Bitcoin, and it's spreading out among people. So it's actually very decentralized in that case. But the thing that needs to be addressed, and the problem that needs to kind of help be solved, and people need to gain education on, is how to take their money off exchanges. Like if we're talking about having wealth and protecting your wealth, like for your audience, there's something known as a bailout, where big banks bail out all these institutions that have failed and they're quote unquote too big to fail. But there's also something called a bail-in, where whenever a nation's debt to GDP gets so high, there's a precedent that's happened in other countries before, where banks will take money from users who store their wealth in the bank, and they lose their life savings. And it's the same type of thing that could happen if you leave your money on an exchange. They could easily take it from you. It's an IOU, just like a bank. But what's powerful about Bitcoin is you can actually hold your Bitcoin yourself, and no one on earth can take it from you. And that's the beauty of decentralized peer-to-peer money.
The exchange wallets that you mentioned earlier, can you expand and elaborate on that? And is it normally one person owning the wallet, or is it within multiple groups of people?
Yeah. So like whenever you hear of like quote unquote Bitcoin hacks, Bitcoin itself as an independent, like decentralized blockchain has never been hacked. But what happens is like just average everyday people go register on Coinbase, and they might buy $1,000 of Bitcoin, and then an exchange like Coinbase gets hacked. It's a honeypot. It's like a centralized area of risk where they're holding millions of people's money. It's billions of dollars. The incentive for a hacker is to hack that. It's very hard to hack an individual. It's near impossible unless, you get jumped or you intentionally lose your access. It takes a lot of effort to do that. But typically it's an exchange gets hacked because it is a target, because they hold so much capital for a large sum of people.
Very, very interesting. So you work as a VP marketing for kind of like a Bitcoin infrastructure company, but you don't personally invest any cryptos or any Bitcoin. You don't personally put money into it.
I don't invest in crypto. I own Bitcoin. I hold it, but there's a difference between Bitcoin and crypto. And there's a series by a guy named Parker Lewis who wrote it called Gradually Then Suddenly, that kind of differentiates between Bitcoin and crypto, and just why Bitcoin and not crypto. Why, if you study the last 10 to 12 years and look at crypto compared to Bitcoin, 99.9% of cryptos go to zero. They do not succeed. They're a failure. And it kind of makes you ask yourself why. Blockchains and smart contracts, all these terms people get so aroused about nowadays, they're not new. They're not unique. They've been around since the 70s and 80s. So it really begs the question, well, what is the real discovery here? Is it blockchain and is it crypto, or what's different about Bitcoin? And that's really the compelling thing that people need to understand and overcome. It's the mental barrier most people unfortunately learn the hard way after losing their money in crypto, and then they end up in Bitcoin.
Yeah, I personally, I talk about this on multiple platforms. I own one Bitcoin. I own this Bitcoin not because I want to go to the moon, because I'm leaving it for my grandkids in case Bitcoin really become big, or in case one day the Chinese yuan or the US dollar, they print so much that they have to abandon it somehow down the road. So this is like kind of like my insurance of insurance. But have you personally seen people who, I guess, reach their financial freedom or reach a higher level of financial situation because of Bitcoin or crypto, and how do they do that?
Yeah. So, the typical thing people do is whenever something's hot, they buy it. We see that in meme stocks, like people are just bandwagon chasers. There's a gentleman named Morgan Housel. He wrote a book called, I forget what it's called. God, it's about money, but he talks about how, I'm spacing on it. We could Google it and share it in the notes.
It's like people chase high, sell low, right? That's
well, what they do is like most people don't come from money. I didn't come from money. My dad used to draw a line in the bathtub saying, "Don't fill water past here because it'll exceed the bill we can pay." But most people think and operate in a gambling mindset. They'll like go buy this random crypto with hopes it'll 10, 20x and they can solve their problems, and they end up losing their money. Same thing we've seen in gambling stocks and all these things. And What it really comes down to is when it like Bitcoin as an investment vehicle, like you have the right mindset, like you're doing the right thing, Cody. You're buying it and holding it, and you're not trying to trade the market. If you do that, you will lose. And history has proven that. But what's important is, people understand the term dollar cost averaging. When you just buy consistently at intervals and you hold it long term, you often make more. You can look at the 200-week moving average and see that just the low level of Bitcoin's price often just moves up. And if you hold it for 4 to 5 years, you make money. It's just that simple. And it has always outpaced inflation. And the thing right now that I think a lot of people have a challenging time understanding is we've never seen a new good monetize in front of our eyes. And if you pause and think about it, we've had gold, we've had these other things in the past, and they're thousands of years old. Like we have the discovery of digital scarcity that's never been possible before. We all grew up, I think we're all of the age where we kind of know what LimeWire or Napster is, or we've illegally downloaded a movie, and it's like digital things are not scarce. Bitcoin actually solved for that. And that's a computer science miracle. Like it's unfathomable to most people, but it's actually here with Bitcoin. And it's just a learning curve that's challenging for people because it does take a little bit of computer science, economics, finance, understanding game theory. And it's just not as simple as a lot of these other things like, real estate. You hear people say, I'm the dumbest guy in the room and I can do real estate. It's like, yeah, you can actually be pretty dumb because it's like you just get a low interest rate and you go buy this asset and it just goes up forever. And that's why I think for this piece of content for your listeners, it's really important to say, is the next 50 years going to be like the last 50 years? Are we just going to keep seeing interest rates go down? It's actually literally impossible for it to keep doing that. So the game has changed. So being the dumbest guy in the room in real estate ain't going to be the fun, cute thing it was, over the last 10 years. It's going to require critical thinking, high quality underwriting, and really understanding. And what's happening, Bitcoin actually is definancializing all of these assets. We actually now have hard money. We have money that cannot be debased, because that's the reason real estate valuations have gone up, is we keep printing money and it's like the one asset that people can put their money into. So kind of requires a new level of thinking to understand.
What do you see the trend of Bitcoin looking like in terms of adoption rates? Because it's not just, within the US, but it's global as well. So with other countries as well, and what you're seeing in the market, what kind of percentages are we looking at, or like what is adoption rate looking like?
Yeah. So El Salvador and in Latin America, it's a national currency there. Like I work directly with some of the schools there. They're teaching kids about Bitcoin. Everyone there has a wallet. A gentleman named Samson Mao, his full-time job now is helping nation states adopt Bitcoin and a Bitcoin standard. And what's really interesting is, again, 80% of the world lives under authoritarian regimes and capital controls. So we're spoiled in America. We don't have to think about it, but you're absolutely right. In India and Vietnam and Latin America and Africa, Bitcoin is the way to save your net worth whenever inflation is 20, 30, 40, 50%. In America, we see the price dive, 50% because it's an early asset. It's a new market. People don't understand it. They don't understand the infrastructure and technology that's being built that's going to make this thing incredible in another 10 years, But in other nations, they're using it. It's actually far more stable than their local currencies. And, one of the most compelling stories in El Salvador is remittances make up about 40% of their GDP, or it did. People would drive 2 to 3 hours to send to Western Union, then they would take 20% of it, and then they would have to come home to send their family money. Now they can do it from a mobile phone. They just got 4 hours back. They saved 10% in fees. And Americans don't understand that. Like the only time I ever see that is when I go to the grocery store and I see a lower income person, typically an elderly woman, pull $1,000 out of her purse and have to do a money order to like pay her rent or something like, but it's not incredibly common in America as it is in other countries. And like that's just the tip of the iceberg. Like there's a lot of things that it also provides just in terms of just web interfaces and like payments over the internet that's pretty compelling as well.
That's really good. Before, I know you really want to talk about the real estate side of things, the multifamily syndication. We will get to that, but I have one last question for you. I understand that the Bitcoin adoption for a lot of the developing country could be a huge advantage because they can move from, they either pack US dollar or they pack really US, European zone, not much else you can pack. I would pack gold or pack, like kind of the currency is tied to, but now they can tie to Bitcoin. Yes, it might be very volatile, but in terms of compare that with their own currency, it's still not very volatile, right? So a lot of people in North America might have to wrap their head around that. Now, that being said, one of the biggest things I always hear is we don't know who created Bitcoin. Yes, we have created this system within Bitcoin that we only have 21 million Bitcoin. And, every so often we have. And now we get down to the point where we have less than 1 million Bitcoin left, right? So is there a risk of after everything is half and all of a sudden they change that standard and that might create a catastrophic ripple effect? I'm just curious. You might not have to answer to it, but I just want to throw that out.
Yeah, there's a good answer to that. So every 4 years, the Bitcoin reward halves. So even though I think there's like just under 2 million Bitcoin left remaining to be mined, it's estimated in 2140, the final bit of Bitcoin will be mined. So every 4 years, the mining reward cuts by half. Mm-hmm. So you can imagine the reward goes down over time. Obviously, the price has gone up over time. And the most important thing about Bitcoin mining, which I also am invested in businesses that do that, is you always seek out the lowest cost power. So in America, the most profitable way to do that is to catch methane and use that methane to mine. So that's like saving planet Earth, mining Bitcoin. And that cost of power is zero because you just connect it to this methane that would otherwise destroy the planet, right? But over time, because it cuts by half, it's going to take a very long time for all of that Bitcoin to be mined. But the reward is not the only thing that miners get. They also get the transaction fees. So even after all the Bitcoin is mined, the transaction fees will be the incentive and the reward to the miner. So even when it's all mined, there is still an incentive to mine and protect the network.
And is there a risk of a sudden the algorithm has changed? All of a sudden 21 more millions of Bitcoin comes out?
So that's a good thing about Bitcoin is it requires consensus. It cannot be changed unless 51% of the nodes choose to do that. And you can run your own node at home for under $100. So everyone has an equal vote and equal say in Bitcoin changing. And that's why it's been so resistant to change over the last 10 years and is still going strong today.
How is Bitcoin being regulated?
So it's challenging to regulate Bitcoin, but they can regulate exchanges. So we saw China ban Bitcoin mining for, the 10th or 12th time, right? And I think it was last June or July, you see the hash rate go down. But what did those miners do? They just moved and mobilized and went to Texas. They went to other areas and the hash rate is actually at all-time high. It's more secure than ever. You can actually use privacy tools to, protect your identity and hold Bitcoin and absolutely no one knows. So it's really not possible to regulate. It is open source software, but the thing that can be regulated are financial institutions and exchanges. So while that'll be regulated, really the goal of Bitcoin is to separate money and state. The state has a superpower on the money printer, and that's why we all love real estate, because we can just get easy access to money and use leverage. But that's coming to an end over the next probably 20 to 30 years. And we're going to have, money that is sound, that just let's be honest, some rich old white guy can't just print what he wants and hand to his friends. So that's going to be coming to an end.
That's beautiful. As a new technology or a new currency gets mature, then more regulation will come in. But we're still in that kind of growing phase and kind of figuring things out phase. So, hopefully we're going in the right direction for that. Now we're going to come back to the boring, but what works, necessity, real estate investing side of things. Can you tell us what you were doing for the past few years you told us about the multifamily syndication?
Yeah. So at my last job, even though I kind of got burned on the equity side, they overpaid us by a tremendous amount. So I took all that money and invested in real estate, and I kind of made up for not getting that equity. And started with single family, but quickly learned the headache of dealing with tenants and learned about the economies of scale of real estate syndication. Instead of buying one living space for, let's say, 200 grand, buy 100 or 200 of them for 70 grand a piece, achieve economies of scale. And when you have over 4 units, you can use bonus depreciation and cost segregation studies for different write-off methods so that you can have tax-free income. And I sold our single family homes and started taking part as an LP with different syndication groups. And that's allowed me to earn passive cash flow alongside my Bitcoin. So, I hold my Bitcoin long term, but I also want passive cash flow to help me get through the day to day because I'm not spending my Bitcoin. And I want my wife and son to be taken care of if I'm ever not here so she can have, a little bit of breathing room. And it's been phenomenal because, multifamily is incredible, mobile home parks, storage units, obviously, self-storage has been great. And I've just really focused on trying to do, at least one deal a year. And it really does require, a 10 to 20 year time horizon because, it's just not one of those things. It's not like crypto and like these other gambling mechanisms that people use where you can just get rich or lose it all quick. It's like a get rich slow scheme, as real estate investors love to say. And I've moved also from an LP to be a partner with Growth View Properties. Growth View is VUE. And we focus on garden style, syndication deals. We have a deal right now in Des Moines, Iowa that we're working on closing this month. And it's just an incredible way to rehab these old apartments from the 70s and 80s, bring them up to code and standard now, give people high quality, affordable living, and earn that passive income just in a tax-free way.
Do you mind if I ask why Iowa? Like, do you guys see something that other people don't see, or that's still top secret?
Yeah. I mean, the Midwest is absolutely incredible. Like in Des Moines, Iowa, it really is probably the best city, if you will. And then in that area, Amazon's there, Microsoft is there, Facebook's there. It's a great place for data centers, but there's also a tremendous amount of just job opportunity there. And the Midwest has been hot for an incredibly long time. Like I invest in Indianapolis, and it's a hub for FedEx, for Amazon, and for these logistics companies. And Des Moines, Iowa is like a top 3 place in the world for insurance, believe it or not. And we know insurance isn't going anywhere. It's such a popular tool. But we have a partner out there who focuses purely in that area. And, as these big areas kind of get overpopulated and everyone just pours their energy there and it gets overly competitive, some of these Midwest markets and like tertiary markets actually have a little more upside and less competition and good return profiles considering the economic environment.
A lot of times when we hear Midwest in the US, we think more of cash flow versus the West Coast and the East Coast, you hear more about appreciation. So when you're looking to invest in different syndications, either as an LP or as in a GP, do you focus more on the cash flow side or the appreciation or a combination of both?
Definite combination of both. I think most investors want to see balanced presentations. Me personally, I really care about cash flow because I want to get to the point in the next 5 years where I could just quit if I want to and do what I want with my time. But a lot of investors, like a lot of deals right now specifically, they may not cash flow year 1 or year 2, but they will down the line. I'm not the type of investor who wants that. I want to see income coming in because I understand how to run a business. I know how to scale businesses. Like instead of just giving someone a bunch of capital, I would just go start a business and, generate cash flow. But I prefer cash flow. But I think that right now there's just a lot of interest, especially from high net worth individuals, just to see the best return they can over a longer time frame. So I might be unique in this situation.
Interesting. Yeah. From my own source, and we have a lot of high net worth people in my circle, a lot of them don't look for exponential returns. They actually, like you said, look for cash flow, and just 5 to 8%. They're very happy with that. And when you tell them more than 10%, a lot of them could be like, "Oh, that's probably too risky," without you hearing anything. Just my own experience on that. That's great. That's great. You moving from LP to GP in Iowa, and it seems like very promising with all those Amazon and all those things move in, and with all the insurance company, we know they're here to stay. So can you kind of give us a bird's eye view of kind of where are you as a high income earner, where are you generating your income through all these sources right now? Do you kind of have a spreadsheet that kind of break down that where you kind of know it in your head?
Yeah, I mean, right now it's primarily my W-2. I have the passive income from the real estate deals. Probably once a quarter, I just see what the cash flow checks are at to kind of monitor and maintain that. And beyond that, I have some other kind of like minor things, but they're not like worth mentioning. And my partner and I, Alex Wells, we started a digital agency called Imprint Digital. I started it with him before I started working at Voltage just a few months before. And while that's not paying me cash flow right now, we're reinvesting all the money into the business, but it's growing well. And I know if we wanted to have an exit, we could sell it, or if we wanted to start paying distributions, we could. But that's really the main things. And like what I'm really focused on is just purely getting, more cash flow coming in, where if I ever do want to take that leap, I can. But those are really the core three right now, alongside growth view. As you guys know, like whenever you're a GP in a deal, you don't get paid unless your investors get their preferred return. So that really is more of a low time preference, meaning like long term view of just cash flow and payout into the future once we take care of our investors' needs first.
So Bobby, after, you're looking at all these different ways that you're bringing in income, generating passive income for you and your family, what is your version of what retirement looks like? Or once you hit that financial independence stage, what does that look like for you? Your own version?
Yeah. For me, I just view it as, I don't really care to live like beyond the means I have now. I just want to have something fun and comfortable for my family, like where my kids can have a good, safe life, and my wife to be taken care of if I'm not here. But what I really view as like financial freedom in retirement is just owning multiple of my own businesses, having cash flow coming in from that, and just imparting like the knowledge I've gained over the last 20 years of just working in business to young entrepreneurs and helping them. Like I think that's kind of almost as valuable as like making money, is like helping others do it. So I'm really looking forward to that, just owning a few businesses in the future, just holding on to them long term, and holding Bitcoin until my children are old enough to understand it and have it, and giving it to them, kind of like Cody shared.
Again, everyone has their own different version of fire. So that's why we asked that. Do you have anything else you really want to share with us before we move into our fire round of 5 questions that we're going to keep you on your toe and be interesting?
Yeah, I would say people listening, I talk to real estate investors and they say, I don't like the volatility of Bitcoin. That's why I do real estate. And I say, well, you're kind of narrow-minded. Like you're not going to go put 50, 100 grand, $500,000 into Bitcoin just in one flop. You need to dollar cost average. But real estate, you kind of have to do that if you're investing in the way we're talking about. So what I tell those folks is look at 1% of your net worth, whatever that is, and just slowly allocate that to Bitcoin, dollar cost average, and you will have outsized returns. If you study any investor's portfolio over the last 10 years, if you had just put 1% into Bitcoin, you would have exponential returns. So I say, view it long term. Think of it that way, and don't paint yourself in a box. But we can go to the next round, it sounds like.
Yeah, this is actually a very important topic that I share across my YouTube channel and my short form video. Is if you prolong your time horizon, really you are not so worried about the short term up and down, and you will make a lot more money. It's not like making money fast, but how do you make money good for good? And that's really the terms for it. How do you make money for good, right? So all these business you're running and all these multifamily stuff and all the Bitcoin having a long-term time frame, it's really the goal to win at the end, right? And a lot of people don't, a lot of people who might never been in that place might not see it, but learning from a lot of more wealthy and successful investor, that's how they do it. Even successful business owner, this is how they do it.
Yeah,
that's great. We'll let Aline kick us off with the first fire round question.
All right, Bobby. So if you were to become a billionaire tomorrow, what would your day look like?
I would take a PTO day and hang out with my wife and son. We just moved to Charleston, so I'd probably go downtown and just eat tons of seafood, take my kid to a splash pad, and then come home and watch a movie. So I'd take a PTO day.
What does PTO day stands for?
Oh, paid time off.
Paid time off. Sorry, I'm not in the business world anymore. We never have that PTO acronym in Canada. Okay, paid time off.
We'll call it BTO, like Bobby time off. So it'd be
Oh, that's
billionaire time
billionaire.
off.
Wow, multiple B's. Okay. Well, that's very what about after that day? That first day? You're like, okay, you sit down, you realize you're a billionaire. Then what?
I'd probably take 100 million and invest it into Bitcoin companies and like further help the technology evolve. Probably take another 100 million and invest it into like building some churches and sponsoring people's ministry. I'd buy 5 acres and a house, and then probably just create like an educational content. Like I've just grown businesses forever and helped other businesses. I just enjoy doing that. I'm not the guy who's going to like start a website and a YouTube channel and do all that. Like, I just think that the esoteric knowledge stays in the mind of the person that has it. They don't go out and sell it. Like, you're not going to sell the alpha. People sell kind of common things. So I would probably, since I'm not like trying to like grow anything new, is just start giving away all the like really secret, like esoteric knowledge maybe, but I don't know. I'd probably give most of it away though, just because I don't know. I don't want to have that much money.
Yeah, $1 billion.
We'll get you back when you get to that point. Second question is, now we're going to bring you down to earth. Now, if you lose everything, instead of being a billionaire, you lose everything overnight, but we drop you $500,000. What would you do to start over right now?
Yeah, I think about this all the time. Like in 2 scenarios. One, if I lost everything, I would start my own business, because that's and I'd market it well and like probably do like a small business, because that's all I've done for people for the last decade. But I also invest all of my money so that I am forced to live like I'm poor, like that's like, they say like millionaires don't like just spend their money, they like invest it. So I try to live and think that way, where every day I operate like I barely have anything, and I intentionally invest so that I have to think and live that way. So I kind of do that every day already, but I'd definitely start my own business, a small business, and just work within my local community and like add value and like innovate in one of these like legacy business models that haven't had upgrades with the technology that we have nowadays.
What industry would the business be in?
There's 2 things people love, regardless of recessions. It's like home services and their cars. So maybe something related to those 2. I really love pressure washing. It's kind of like mowing a lawn. Like as a kid, you do those perfect lines, and afterwards you're just like,
it's like therapy.
Like, yeah, I feel like pressure washing would be the same. I would just put on podcasts and like pressure wash and just like shake the hand and go on to the next house. That would be a lot of fun, I feel like.
I remember we did some, my husband did some pressure washing a couple months ago. And after it turns off, you're like, oh, I can hear again. It's so loud.
Yeah.
Hilarious.
So Bobby, if you were a podcast host, who would you interview if you could interview anybody in the world?
Can they be dead?
Yes.
Yep, they can be dead.
We'll bring them back.
I would want to interview Hal Finney. He was like one of the first communicators with Satoshi Nakamoto, the anonymous creator of Bitcoin. I would love to pick his brain and talk to him. He was an avid runner and just one of the earliest recognizers of Bitcoin and like a great thinker. So I think he would be awesome. I would probably, I can't even think of anyone else I'd want to interview. He's the first person that comes to mind.
Of course, it kind of makes sense. You're in the Bitcoin industry. You want to talk to anyone closest to the creator of Bitcoin, Hal Finney. Very cool. Unfortunately, passed away in 2014, right? Now, what are other ways that you're giving back or planning to give back? I know you kind of talk about it, but.
Yeah. So I have friends who are like missionaries and whatnot. Like I like supporting them and giving back, like people that have a heart not to do kind of like what we maybe do, or our audience, like in terms of investing, like all of this stuff, like friends that are just like, I'm just going to give my life to this cause. People that have a heart for that, I really admire that and I want to support them. So that's something I try to do, because those are the people that, I think make the biggest impact in the world. So I want to continue supporting friends and just people I know that do that. But also beyond that, I have a heart ever since I was like probably 16. I've just had a heart for like young boys who like don't have fathers, or maybe like, just they need like a father figure in their life and just like the role model of like a man. Like I just hope I can not only give that to my children and like fulfill their needs, but provide that to like other young men that just need like good influence or just help in terms of business, health, mindset, just like overcoming like obstacles. Like that's pretty important to me. And I just want to just be that to just any guys out there. Cause I know there's like this confusion, like it's like all this women's rights stuff. It's kind of like, it's kind of a scam. It's like, we need to respect masculinity and respect the feminine side too. And I think men are underserved in that way.
There's a really great YouTuber. I don't remember what his name is, but he does something similar to that, where he not necessarily on like the business side of things, but he just shows
how to tie
a tie or how to shave, and just like everyday things that like kids who are young boys who don't have fathers can go to this YouTube video and learn how to do, just like the normal like day-to-day guy things.
Yeah, he went viral. I saw him somewhere, but you're right. He's like very popular.
Yes.
Nice. Yeah. And last question for you is, where can our audience find you?
Yeah. So I really enjoy Twitter. I know a lot of people don't like it. It's because Twitter's horrible at onboarding, but Twitter's incredible. I'm like, my name on Twitter is iBobbyShell. So like the iPhone, just IBOBBYSHELL. And there's really not other Bobby Shells out there. If you Google my name, I'm pretty sure you'll see Voltage, Growth View, and Imprint Digital, our marketing company. But I'm active on LinkedIn too. I enjoy LinkedIn as a platform. I think it's a good place to create awareness for different things. So I'm on LinkedIn as well. So it's probably Twitter and LinkedIn are the best places.
Awesome. So find Bobby if you guys want to learn more about marketing and Bitcoin, more about multifamily syndication and everything else he's doing. Go find Bobby on Twitter or LinkedIn.
Awesome. Cool. Thanks so much, Bobby. I really appreciate this.
Yeah, guys, it's been fun. Thank you.
Yeah. Thanks for coming on.
All right, y'all have a good one.
All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community, where we help each other reach our own version of FIRE.